Hello guys, it's Kings right here. You're welcome again to my YouTube channel. Alright, so it's a new trading week, guys. As always, this week is a profitable week already. Okay, so we'll be analyzing the market together as we do it. Then let's see where price will be going to next. Alright, so if this is your first time joining me, I share my Forex educational knowledge on this YouTube channel. I trade ICT concepts and I trade just off the EURUSD. Alright, so I analyze both EURUSD and the XY, okay, every single week. Alright, determining the daily or the weekly direction bias. Let's know what to be looking out for in the market. So maybe if you trade like other major currencies like the XY correlated pairs, you can actually use our analysis, add it with yours, and make the most out of the market. All right, so that's it. Maybe you can also you can actually drop what you think on the pair and analyze. All right, so maybe subsequently I'll be analyzing other pairs, but for now I analyze the XY and EURUSD. Let's see what we'll be looking out, okay, in the marketplace this week. I use ICT concept, which is the institutional order flow concept. Okay, keeping it very simple, guys. Okay, just understand that price is not random. It moves basically based on our liquidity, okay, from internal liquidity to external liquidity and vice versa. You can as well actually scroll down, then check out my old videos so that you learn more and the approaches I use to actually navigate the market. Okay, it's very simple. I start from the higher time frame. Okay, basically I check the weekly time frame, then I check the daily time frame, then 4-hour time frame, then trade in line with 4-hour direction bias correctly. All right, using my day trading model. Okay, so guys, this week we're analyzing again EURUSD and the XY. Okay, what do you think is going to happen? Is EURUSD going to buy? Are we selling the XY or are we buying the XY? So whatever it is, we are going to analyze using the concept, okay, knowing where price have taken to next. Personally, what I do is anytime I come to the chart to determine the daily direction bias, I'll ask myself these 3 questions. Where's price coming from? That's number 1. So if I'm able to like discover where price is coming from, that is the old swing point that price have taken, the recent swing point price have taken at that moment. So that's where price coming from. Okay, then I ask myself, where is price currently? Okay, is it maybe it's coming down from buy side liquidity? Is it currently inside an internal liquidity? All right, then the next question is, where is the next drawn liquidity? That is where price is heading to next. Okay, with this you'll be able to trade in line with the next drawn liquidity and make the move. And once price gets to be drawn liquidity, then you hold on, then wait for reversal and trade it back to the opposite drawn liquidity. All right, as simple as that, guys. So I'll be taking you guys to the chart. Let's see what to be expecting for the week on EURUSD and the XY, okay, to know if we are bullish this week or we are bearish. Okay, maybe at the end, make sure you drop your all comments. What are you expecting on these pairs? All right, guys, let's head to the chart. So guys, welcome back to the chart. All right, so this is the XY. The XY weekly time frame right here. So you can see price books majorly based on liquidity from internal liquidity to external liquidity and vice versa. You can see that right here. Price coming down from this point to these points, then to this point, then breaking market structure, taking on this high. They are returning to this little order block right here, internal liquidity taking, then price expands to the upside, taking out buy side liquidity. All right, okay, then it cuts that buy side liquidity. Okay, so as simple as that, that's how price books, guys. Price books basically based on liquidity from internal liquidity to external liquidity and vice versa. Okay, so right now you can see previous week closed as a contraction candle. Contraction candle is a candle with small body range. All right, it has a little body, this contraction candle. So upper week closed with a contraction candle, previous week closed with a contraction candle. And based on the rules, whenever we see all this contraction candle, we should be expecting expansion. All right, you can see it right here, contraction candle, contraction candle. You can see this big expansive candle, right? Contraction candle, you can see this big candle. All right, so anytime we see, you can see little candle, we should be expecting what? A candle with large body range. Do you understand? So that's it. So now, what do you think we are going to expect on this this week from the market? It's very simple, guys. You can see what's happened here. Price had taken out this buy side. You can see this buy side liquidity. I had pulled back a little bit into this internal liquidity, then expanded to the upside. Now, what is, price pulled back to what? A weekly gap. You can see the weekly back and rejected to the upside as a contraction candle. So you should be expecting an expansion to the upside. All right, I'm expecting an expansion to the upside. Okay, because I saw this as what? A pop into the gap. Into the FVG. We call it IOFVD. All right, institutional order flow entry drill. You understand? IOFVD. Okay, so as simple as that. A partial pop into this gap and creates contraction candle. So you should be expecting expansion because this is the drawn liquidity. Okay, This is the current drawn liquidity, this high here, and this is a monthly high. Do you understand? So that's where price is drawing to over time. Keeping it very simple, guys. So we are more bullish. I'm more bullish actually this month. Sorry, this week. I'm more bullish this week. Okay. So let's go to the daily time frame. Let's see what we are doing here. You can see from the daily perspective, you can see there was also a gap right there. That price just mitigated. Okay, you can see this LVG supply price just completed. All right. And after that, what you see, guys, there is this is what we call a flagship pattern. Flagship pattern is kind of an engulfing pattern that takes out the high and low of the previous candle. So we had two engulfing pattern right here. Sorry, two flagship pattern right here. It took out high and low of the previous candle. Took out high and low of the previous candle. Now the rejected is expanded to the upside. All right. Where is it coming from? From internal liquidity. All right. Where is it currently at this point? Where is it going to take out the buy side liquidity? Definitely, because this, I say these things are liquidities. Okay. These are joint liquidities rested at these highs. You can see a liquidity area. So to clear this liquidity here, then take out the high. Okay. So that's my expectation for the week. All right. So a validation will be if this low, previous week low is taken. If this low is taken, then definitely price will be coming to this gap right here. Okay. So you can see this gap right here. So price will be reaching for this gap right here if this low is actually taken. All right. But I don't expect price to take that low. All right. So but anything can happen. Anything can happen. All right. You don't take my word for it. Don't take my word for it. Anything can still happen. All right. So that's why we actually prepare on the table that will happen in the marketplace. All right. So that's it, guys. So now using this now, you know that EURUSD actually actually move in opposite direction with the XY. All right. So very simple. What am I going to do? I'm trading at the same thing I'm expecting on the XY. I'll be expecting the opposite on EURUSD. Okay. I'm expecting the opposite on EURUSD. So let's check out EURUSD. So on EURUSD, the same narrative, just opposite direction. All right. The same narrative, opposite direction. All right. You can see. Let's check the weekly time frame. Right. So from the weekly time frame, what do you expect? You see the same narrative, guys. Price books major based on liquidity that has expanded from here. Let me use my this. So you can see from here, taking out this low, expanding, taken, returning to internal liquidity, this other block, external liquidity taken out this low. What do you think now? I need to pull back into this and a drop right there. A drop right there. Do you understand? So that's the expectation for the week, guys. That's the expectation for the week. That's what I'm looking out for in the all right, so guys. So that's it, guys. Okay. That's the expectation, guys. So I'm kind of bearish this week on EURUSD because it's coming from this gap. All right. So it's coming from this weekly gap right here. Okay. So let me just mark out. Let's go to the day time frame. So the same narrative right here. Okay, the same narrative right here. I want us to understand that the weekly time frame is actually more significant than the daily time frame, right? So that's why normally you can see a breaking market structure upside. I'm expecting price to reach for this gap, but since I have this flagship pattern, it's kind of an indication that price going to reverse, and mostly we follow the XY. Do you understand? So this in a real sense, I'll be expecting a reversal from this point, but I feel markets will be dropping. All right. And with this now, because this is kind of a complication, but it's more clearer on the XY. So I'm actually more convinced with the analysis I have on the XY. Okay. But EURUSD is trying to like tell you that it may bounce off from this point to the upside. All right. But that's not the deal. The deal is what the XY is saying. Now, the confirmation that we're going to wait is if this previous low is taken, then it's a confirmation that we'll be expecting these lows to be cleared. All right. So we're expecting these lows to be cleared, right? So see these lows, this trend line fan right here. So you'll be expecting them to be cleared. Okay. So that was it, guys. But if reverse is the case and this previous this high is taken, then you should be expecting this high FVG to be filled then before a drop to the downside. All right. So that's it. Then you know, from what we have on the XY, I'm more bearish. Okay, I expect this low price to drop down. Then the confirmation will be if this previous low is taken. All right. So let me take you guys to my 4 hours because I've been trading from the 4 hours. Okay, since I already know that price will be dropping. So from 4 hours, you can see price an extra confirmation. There's already after a swing point is taken, there is a BMS on 4 hours. The breaking market structure to the downside already on the 4 hours. All right. So you can see stopwatch here. So after the stopwatch, price broke down, taking out this low and also taking out this low. So what I will be doing next week is liquidity is taken. So I'm expecting back to pull back into this. You can see this little gap right there. You can see this little gap right here. Okay. You can see this little gap right here. And probably maybe reaching for this other block, whichever way you can see. So it's maybe reaching for that other block right there. So anything, all right. So I'm expecting something like this, okay, something like this, and you know, a drop in the start. So that's what I'm expecting next week. Okay, so once price actually go to this point, then I'll be going to lower time frame. I'm going to lower time frame to actually engage. That is the 15 minutes. All right, you can see you had about 1, 2, 3, 4, 5, 6 trades. Though I didn't take this particular trade, let's say 5 trades. All right, then about 3 wins and 2 losses. All right, so it is what it is. You can see following price. It's very simple. Following price. Buy sell liquidity taken. The same narrative across all board. Buy sell liquidity taken. Shift the market structure with sold. Internal liquidity field. Shift the market structure with what? The same narrative. Shift the market structure. Buy sell liquidity taken. We sold, but news manipulated and then delivered. So the same narrative, guys. Keeping it very simple. All right. So that's how I trade. Keeping it very simple. Buy sell liquidity taken. Go to 15 minutes for entry. I sell into internal liquidity. Buy into external liquidity. Sell into external liquidity until there's a break and stop short. The same narrative, guys. Keeping it very simple. All right. You don't need to complicate your strategy. So what I trade, just following order flow and market structure for entry. All right. Keeping it very simple. All right. I don't complicate the market. I keep it very simple. Just institutional order flow and market structure. Okay. So I will determine where price drawing to next. Okay. I will trade into that area. Then wait for reversal confirmation in my lower time frame. Trade into the opposite area. Do you understand? So maybe if price wants to at times you may be trying to like trade the reversal and price may like try to continue to the main direction. That's when you take an L. All right, but it is part of trading. Okay, but most of the times you'll be right because you are just following price, trading, taking out the buy side liquidity and the sell side liquidity intermediately. Okay, so that's it, guys. Keeping it very simple. So this week is a profitable week already. Make sure you apply proper risk management. Okay, don't try to flip accounts. All right, maybe it may work for you, but it's actually risky. Okay, focus more on building capitals. Okay, leverage on profit. All right, if you want to know the program I use, you can check the link on the description. All right, know the program I use, register. It's one of the cheapest program and they are very reliable. Okay, so you can just purchase an account, leverage on them. Okay, the next recommended program is FTMO for me. You understand? So that's a major program. Another program for instant funding. Maybe if you need instant funding, you can use Tentrades. Okay, they are very fast. Their payments is very fast. By weekly payments, 70-30 profit split. All right, so maybe I'm going to make a video about that. All right, so that's it, guys. Make sure you execute 100%. I always tell my students, see, it's not by analyzing the market. The main thing is capitalizing on your analysis. All right, okay, and you should understand that you don't need to be right or wrong for you to make money from the market. Okay, what you need to do is once you see your edge, capitalize on it and execute 100%. All right, execute as though you never lose, then manage your risk as though you never won. That is the word for the week. All right, take that goal. Execute as though you never lose, manage your risk as though you never won. All right, this is the game. So the game is for you to stay long in this game. All right, so that's it. Okay, protect your capital, execute 100%, allow your edge. to play out. All right, guys, I remain you kings. Maybe if you're not subscribed, do well to subscribe, like this video, guys, and make sure you share. All right, so that it's going to reach a lot of persons. Till the next time, I wish you all good luck, profitable week, and bye for now.